All right, today we're going to break down one of the most visual and, honestly, most straightforward tools you can have on your charts, the Parabolic SAR. We're going to get into what it is, exactly how to read it, and, most importantly, how to use it without getting tripped up.
So let me ask you a question. For anyone who's ever pulled up a chart and placed a trade, what's the single hardest part? It's usually not finding a reason to get in. The real struggle, the thing that keeps people up at night, is figuring out when to get out.
Yep, it's knowing when the party's over. You could nail the entry perfectly, but how do you know when that trend is about to run out of gas? A great entry doesn't mean a thing if you give all your profit back, or worse. This is a huge problem for traders, and it's the exact puzzle the indicator we're talking about today tries to solve.
So, this brings us to what I like to call the trend reversal riddle. And to help us solve it, we're going to use a simple visual guide that's designed to give you a clear heads up when the momentum might be about to shift.
Okay, so what is this thing? Meet the Parabolic SAR. At its heart, it's a trend-following indicator, and all it does is plot a series of dots on your chart, either above the price or below it. Its whole job is to give you a simple visual clue that a trend might be ending.
And here's what it looks like out in the wild. Don't worry about the math or the calculations for a second. Just look at it. You've got your price bars, and then you have this nice clean curve of dots tracing the price action. That's it. That's the whole thing. Its real power is just how simple it is to see.
Okay, so now that we see what it looks like, what in the world are these dots actually telling us? Well, this next part is all about decoding those dots, and you're about to see that the rules of the road here are incredibly simple.
You know, the name of the indicator itself is a massive clue. SAR actually stands for Stop and Reverse. And that's not just some fancy name. It's basically the instruction manual. The indicator is literally trying to tell you when it might be time to stop your current trade and maybe even reverse your position.
So here's the entire foundation. It boils down to one simple binary rule. If the dots are sitting below the price bars, the indicator is telling you we're in a bullish uptrend. On the flip side, if the dots are above the price bars, it's signaling a bearish downtrend. Just remember, below means up and above means down. That's rule number one.
And this is the magic moment. This is what we're always watching for. It's not just about where the dots are, but when they move. The instant those dots flip from below the price to above it, or from above to below, that is the stop and reverse signal. It's a huge visual flag that the old trend might be dead and a new one is starting.
Okay, theory is great, but let's get to the fun part, putting this into practice. How do we take these little dot flips and turn them into actual trading signals we can use?
Let's walk through a buy setup. First, you see the dots are hanging out above the price. That tells you the market's in a downtrend. So you wait, you watch, and the moment those dots flip and the very first one appears below a price bar, that's it. That's your potential buy signal. The downtrend could be over.
Now check out this chart. This is a picture-perfect example. On the left, you see that long string of dots floating above the price as it falls. And then, right there at the bottom, boom, the dots flip underneath. And look what happens almost immediately after. The price starts to climb. That's the buy signal right there in action.
And you guessed it, a sell signal works the exact same way, just in reverse. This time, you start by seeing the dots below the price, which tells you we're in an uptrend. You wait patiently for that flip, and when the first dot prints above a price bar, well, that's the indicator tapping you on the shoulder saying, this uptrend might be running out of steam.
And if we look at the earlier part of that same chart, you can see the sell signal play out. The dots are clearly trailing below the price during that nice rally. But then, right at the peak, you see the flip. The dots jump above the price, and sure enough, the downtrend begins. But listen, this is really important. It's not just about getting in. Like we said at the start, the hardest part is knowing when to get out. And that stop and reverse system is also an absolutely fantastic way to manage your exits and protect your profits.
So let's imagine you went short on this currency pair. You sold it, the dots are above the price, and your trade is making money. How do you know when to close it out? Easy. You just follow the indicator. The very second the dots flip and one appears below the price, just like you see here, that's your signal. Time to get out of that short trade and lock in your gains.
Okay, now before you get too excited and start slapping this on every chart you see, we have to hit pause. Because like any tool, the Parabolic SAR has a very specific job. And if you use it in the wrong environment, you're going to have a really bad time. This is the one big warning you have to hear.
I'm putting this quote directly from the source material up on the screen because it is that important. The parabolic SAR is a trend-following indicator. Its entire reason for existing is to work in markets that are making big, sustained moves in one direction, those long, clear rallies and deep downturns.
So what's the kryptonite for this indicator? A market that's going absolutely nowhere. In a choppy, sideways, range-bound market, the price is just going to whip back and forth across the dots. And this is going to cause a nightmare of false stop and reverse signals that can just chop up your account.
So to make it super simple, here's the rule of thumb. Do use this tool when you can look at a chart and clearly see a trend. But please don't use it when the price is just bouncing around in a tight range with no real direction. Knowing when not to use a tool is just as important as knowing how to use it. All right, let's just quickly recap the most important stuff. Parabolic SAR is a super simple visual way to spot potential trend reversals. Just burn this into your brain. Dots below the price means bullish, dots above means bearish. When those dots flip, that's your potential signal to get in or get out. And the most important rule of all, it works best in trending markets.
And that kind of leaves us with a final fascinating thought. The parabolic SAR is loved because it's so simple and its signals are so clear. It takes away a lot of the guesswork. But that brings up a much bigger question for any trader. In a world as complex and chaotic as the financial markets, is simplicity really the best strategy? It's definitely something to think about. Thanks for watching.